If you sell an asset at the absolute highest price it has ever reached, you might assume you've made the highest possible profit. But in trading, those two numbers don't always move together. Take a trader named Alex, who starts by purchasing a single apple for $10. Soon, the market price climbs, hitting a peak of $20. At this exact moment, the math is simple. If Alex sells now, the profit is $10. This $20 peak is the maximum price, the highest point the market reached while Alex owned the apple. Alex decides to wait, showing that an asset's market price and a trader's personal profit aren't always on the same scoreboard. The market shifts, and the price of the apple falls rapidly from that peak down to $8. Because Alex paid $10, the investment is now sitting at a loss. This low point is recorded as the Min P&L, or minimum profit and loss. It marks the specific moment when Alex's account balance was at its lowest point during the trade. Min P&L shows the level of exposure Alex faced, measuring the risk taken before the trade eventually moved back into the green. Seeing that apples are now cheap, Alex buys 10 more at that $8 price. This is what traders call multiple orders, adding to the total inventory while the position is still open. The price begins to recover, eventually leveling out at $15. Even though the price is rising, it is still well below the previous $20 peak. On that very first apple bought for $10, Alex now has a $5 profit. But the 10 apples bought for $8 gained $7 each, adding $70. Alex now sees $75 total profit, far exceeding the original $10 at the market's peak. This high point in the personal balance is max P&L. It proves that maximum price and maximum profit are independent. Max P&L tracks your best personal moment, regardless of what the market's high score was. Toward the end of the day, the price slips slightly to $14. Alex decides it's time to exit and sells all 11 apples. Because the price dipped before the sale, the final profit is lower than that $75 peak. This difference is called Profit Drawdown. It captures the amount of potential gain Alex left on the table by waiting until that $14 mark to sell. Professionals use these metrics to evaluate how a strategy handles money in the real world. By tracking these figures, traders can see exactly how efficiently a robot enters and exits positions. Tracking Min P&L, Max P&L, and Profit Drawdown provides the actual math behind a trader's success.